Over the last 6 months, I have been obsessed with real estate. I've been to open homes, I've read books about real estate investing, I've watched realestate.com.au every single day, and I've even applied for some rentals and been turned down. So now all this has me wondering, what's the fastest way I can save up for my first home deposit? So in this video, I'm going to share the research that I've done, including a whole bunch of government grants, schemes, and incentives. And then at the end of the video, I'm going to share my strategy for how I'm going to save up for my first home deposit as fast as possible. Hey guys, my name is Michael and I'm an accountant from Australia. Working in accounting has let me see behind the scenes of some of our wealthiest clients, and what they all seem to have in common is that they all invest in real estate. So as a millennial personal finance geek, I took it upon myself to conduct vigorous research in the hopes that maybe one day I'll also own millions of dollars of real estate. But it all starts with your first home. So let's go have a look at some of the research I've put together so that you and I can learn how we're gonna save up for our first deposits together. First cab off the rank is the First Home Super Saver Scheme. This was introduced in the 17-18 federal budget, and it incentivizes first home buyers to save through their super funds. So normally your super funds can't be touched until you turn 65 or hit your retirement age. But however, there is this incentive that allows first home owners to access parts of their money if they have voluntarily contributed to their super fund. Now, what I mean by voluntarily contributed is that this has to be extra super that you send to your savings. So it doesn't include your superannuation employer guarantee, the usual 9.5% that your employer currently pays. And this usually looks like a salary sacrifice arrangement with your employer. To set up this salary sacrifice arrangement, you just simply need to talk to your employer, saying that you're wishing to do the First Home Super Saver Scheme, and that you want to voluntarily contribute pre-tax to your superannuation. And the real value of this scheme is that it is all pre-tax, meaning that your taxable income is actually going to reduce, and at the end of the day, you'll be left with slightly more money. So for example, if we compare two people both on 50K per year, we have Super Sam, who saves using the First Home Super Saver Scheme, and we have Normie Norm, who just chooses to save for his first deposit in a normal bank account. So Super Sam and Normie Norm both make 50K per year. Super Sam then arranges with his employer to salary sacrifice $10,000 per year of his pre-tax income into his superannuation fund. At the end of the year, his taxable income will therefore be $40,000, which is what his tax will be calculated on. Normie Norm's taxable income will still be 50K because he hasn't chosen to salary sacrifice. So his tax will be calculated based on the 50K taxable income. As you can see here, Super Sam will pay about $4,500 in tax, whereas Normie Norm will pay close to 8K. And at the end of the day, Super Sam's take home will be 35K and Normie Norm's take home will be 42K. Now that Normie Norm has paid his tax, he can move that $10,000 into his other savings account. So the post-savings income will look like this. But it's also important to note that there is a little bit of tax that you have to pay when you contribute to super. So your superannuation fund withholds 15% of the contributions as tax, so we have to account for that for Super Sam. And after the tax and super, this is what it looks like at the end of the day. You can see that Super Sam at the end of the day is benefited by $1,750 compared to Normie Norm. Now there's a couple of rules and limitations to the First Home Super Saver Scheme. The first is that you can only contribute $15,000 per year, and the second is that you may only contribute a maximum of $30,000 across all years. So once you've saved your $30,000 maximum in your First Home Super Saver Scheme, when you go to actually purchase your property, you just need to apply for your super fund to release these funds back to you. When the super fund releases the funds back to you, there will be a tax withholding component, but you should be able to get that back on your tax return. Now, there are two other things that you need to note about the Super Saver Scheme. The first is that you must be intending to live in the property for at least 6 months in the first year. And the second is that you must apply for the scheme before you sign your property contract. All right, so now that we've got our savings in super, now we need to worry about the loan. So that brings us to the First Home Loan Deposit Scheme. This is an incentive by the federal government to help first home owners move into their first properties sooner. Now, traditionally, if you wanted to go out there and buy a property, you would need a 20% deposit. However, if you don't have 20% deposit, you may be able to get away with a 5% deposit at minimum. However, you will be liable for lender's mortgage insurance. Lender's mortgage insurance is just dead money to you that you have to pay to the bank just in case you default on any payments. So it's best to avoid this where possible. And this is where the government steps in. They are offering 10,000 spots every year for first home owners to be exempt from lender's mortgage. So you may only have a 5% deposit, a 10% deposit, and won't be eligible for the mortgage insurance if you are accepted under the scheme. A couple of eligibility things: your earnings must be less than 125,000 if you're a single, or 200,000 as a couple. You must be intending to live in the property, and there are also some property value thresholds, state by state, area by area. They're slightly different. So if you were lucky enough to get the first home loan deposit scheme, you may also want to consider the HomeBuilders Grant. The HomeBuilders Grant is a part of the government's economic response to coronavirus, so it's quite a new thing and will be expiring soon. In fact, you need to have your contract signed before 31st of March 2021. Now, it's also important to note that this grant is only for brand new builds or substantial renovations, but they have to be quite big. Now, the HomeBuilders Grant is a $15,000 cash payment, and that goes through the Office of State Revenue of your local state. It's also important to note that there's a couple of different property value thresholds, so it's $950,000 in New South, $850 in Victoria, and $750,000 everywhere else in Australia. If you wanted to read more about any of these schemes, I've left links to where I did all my research in the description below, so please feel free to check them out. It has a lot more information about certain eligibility and thresholds and criteria. Now, each state government also offers some incentives and concessions, so I'm just going to quickly list them off now. It's a huge list, so just do your own research of this part, but just keep your ears out for your own state so that you know what's around. The ACT are doing means-tested stamp duty concessions. New South Wales First Home Owner Grant is a $10,000 cash payment for brand new buildings, $750K or less, or if buying existing ones, $600K or less. No stamp duty under $650,000 homes, a stamp duty reduction under $1 million, and no insurance duty on lender's mortgage insurance. The Northern Territory's First Home Owner Grant is a $10,000 cash bonus. There's also a build bonus grant and a stamp duty discount. Queensland's First Home Owner Grant is a $15,000 cash payment, and they have no stamp duty up to $500,000 properties. South Australia's First Home Owner Grant is a $15,000 cash bonus for new dwellings up to $575,000. Tasmania's First Home Owners Grant is a $20,000 cash payment for brand new homes, and there's also a 50% stamp duty reductions on properties with a value of less than $400,000. Victoria's First Home Owner Grant is $10,000 cash payment for city properties, or $20,000 cash payment for regional properties. Both have to be brand new homes, and there are also stamp duty reductions. Western Australia's First Home Owners Grant is a $10,000 cash payment for new properties. There's also a stamp duty exemption up to $430,000 and a concession up to $530,000. There's also a home buyer's assistant account, which is a $2,000 grant for incidental expenses when buying property. So this brings us to the final part of the video, where I'm going to be sharing my strategy for saving up for my first home deposit, which you may want to copy if relevant to you. So after doing my research in this video, I noticed that here in Queensland, most of our property values and thresholds all revolve around this $500,000 mark. So I'm going to be aiming for a $500,000 property. So based on that value, a 20% deposit would be $100,000. I'm going to aim for that 20% deposit rather than something smaller, so I don't have to pay mortgage insurance, and just in case I don't get accepted for the first home loan deposit scheme. The first step I'm going to do to get to that $100,000 mark is walk into my workplace on Monday and set up the salary sacrifice arrangement. I'm also going to arrange with my employer that if I get any pay rises over the next 2 years or so, to keep my take-home pay the same, and just to increase that salary sacrifice amount so that I'm saving the maximum amount as quickly as possible, that $30,000 over a couple of years. The second step of my strategy is one that people don't really talk about too much, but is a massive factor, is increasing my income. My current income probably can't service a $400,000 loan. I wouldn't have the borrowing capacity, so I will be working hard to increase my income so that my borrowing capacity increases with it. And the third step of my strategy will be having a savings buddy. So by telling someone that you have this goal of saving $100,000 for a home deposit, it keeps you accountable. And so I'm making this YouTube video so that I have all of you guys keeping me accountable. And that brings us to the end of the video. As I mentioned earlier, there's links to all the resources and research that I used in this video in the description below. While you're down there, please leave a like. And if you have any questions about anything, leave a comment and I'll get back to you. I respond to all my comments. I also have a whole bunch of other videos about investing, tax, and my overall 2021 investment strategy. So that might be useful if you enjoyed this video.